This is episode 42 of the Steady Trade podcast with your hosts, Tim Bowen.
There's too much volume there. That's telling you it's all new buyers.
And Steven Johnson.
And I didn't cut it because I was copying. I just thought, you know what it is? My account size is all right. I've been doing well. I'm sure this one's going to come down. Famous last words. Famous last words.
Today's episode tells a story.
This is the monster under the bed.
It's a scary story.
The scary monster. This is the Candyman. If you're old enough like me to remember the movie, you never say Candyman's name 5 times where he appears, but this monster is the FOMO Monster. FOMO, the fear of missing out.
The FOMO Monster. That doesn't sound like a very scary monster, Tim. That sounds like a Elmo Tickle Me monster. What's scary about FOMO?
Steven got bit by this again today or yesterday, and
and he lost another $5,000. Right. What is it that you always say, Tim? You either what or you what?
You either learn or you earn. So you obviously didn't earn anything on this trade. So what can we learn from it? What can the listeners learn from it?
Ouch. But yeah. So that's today's episode. Everybody's going to be listening to it. You don't want to miss out on that, do you? Get it because of the FOMO, fear of missing out monster. You don't want that to happen to you. Anyway, let's dip into today's mailbag. Today's question: can you give us some basic trading tips for more than just short setups? So Tim and Steven are going to be talking about other kinds of setups right now.
Liam Tanner says, maybe we should not just have a short selling special. Maybe we could go through some of the setups you listed, such as longs, breakouts, 52-week highs. Give us some basic trading tips for them. And then he goes on to say, other than that, does someone find their best setup they understand at random, which is a great question, or do they go through a predetermined setups and figure it out from there? So basically, can you give some examples of some setups, and can you help Liam Tanner find out how he can find his own setup for himself that he likes?
Well, we've talked about this here and there on the podcast. I say it sounds like you're getting started in momentum stocks. So I say one of the best setups to look for is that what we call a VWAP hold high a day break, or an ABCD setup. There's a lot of different names for it, but that's that stock that spikes early, has news, is breaking out on the chart, whether it be 90 days, 6 months, or a year. Then it consolidates, holds through the day, and then re-breaks late day. So that is now confirming to you that this stock, it has at least 1 day worth of gains in it. Doesn't mean it won't gap down tomorrow, but if you got the news, you got the chart, it's a good quote unquote story. Hopefully it's not total fluff news, which we need to discuss that. How do I recognize the difference? But when you get that setup, that's what I call when the stock proves itself. Now, it could still fail late day, but when you get that secondary break on news with a good-looking chart, those are the stocks that tend to continue the next day, so on.
Yeah, and I mean, I'm definitely not going to give any long advice, especially with you not here, because I'm the worst long of all time. And I don't know why I'm like backwards or something when it comes to longing, but for me, what I've seen a lot work recently with longs is these kind of low float. It's been low float mania recently, but these low float, high volume runners, and even if the news isn't great, they'll go through the roof. They'll even halt a few times. They'll come down. They'll look like they're failing, but then they'll kind of consolidate around VWAP and they'll run into the close again. Mm-hmm. I've seen that a lot of times, and that is kind of that VWAP hold. I don't know if you've seen that as well.
Yeah, and the only reason, and I totally agree. I mean, last week we had a 1,000% runner that did exactly that. The only reason I avoided discussing that is, especially when these stocks start halting, as a new or aspiring trader, that's a scary place to be. And these things make big moves to the up and down side, which can really test your discipline and you often can get scared out even though the trade works. Yeah. And that setup is kind of I would call it a seasonal setup. These low floaters kind of flare up and then kind of go away. So it's not like it's something you could, if you're sitting there looking for them every day and every week, sometimes they kind of run in packs, basically.
Chest size.
3, 2, 1. Welcome back to the Steady Trade Podcast. Today we have a topic that is very important, very recurring, which kind of happens to be recurring to a certain extent with my co-host. But, I call this this is the monster under the bed. This is the scary monster. This is the Candyman. If you're old enough like me to remember the movie, you never say Candyman's name 5 times where he appears. But the monster that bites so many traders, new, intermediate, advanced. I mean, hey, I deal with it. I deal with it every day.
Chest size.
And this monster is the FOMO Monster, FOMO, the fear of missing out. And Stephen got bit by this again today or yesterday. And the reason it's called the fear of missing out is in the end, Stephen shorted a stock early, got torched, and today it was an incredible short. Late day yesterday, the stock faded into the close. It gapped down. I think it's down 20% or something like that today.
It's 98.65.
Okay, all right. I was off by 0.35%.
Get your facts right.
but so he recognized a great setup, and this is exactly his type of trade. It was a sketchy biotech stock spiking into long-term resistance on mediocre news, all these things he looked for. But, and this is something we talked about in StocksToTrade Pro yesterday morning, he piles in at like 8:50 a.m. Eastern, which is pre-market, which is something that works sometimes, but it can be very dangerous. But the nasty monster of FOMO reared its head, and so kind of walk us through yesterday morning, Stephen, and let's kind of debate this and what we can possibly do to lessen this or to learn from this, because I stole this quote. I use it every day in StocksToTrade Pro, but you either learn or you earn. So you obviously didn't earn anything on this trade. So what can we learn from it? What can the listeners learn from it?
No, ADOM was one of those situations, and I just want to prerequisite by saying the loss was about 4,700. But for me it was a bad night. But the way things and the worst of it was when Timothy Sykes publicly wrote in the chat room saying Stephen is a degenerate. But I talked about it with him, and it's all good. But
oh, trust me, he yelled at me too. I was getting text messages about you. I'm like, hey, he's my podcast host. He isn't my little brother. Don't call me. Don't yell at me about this.
Was he actually yelling at you? He wasn't.
Oh yeah.
He was really pissed. He was really pissed. He was like, "What the fuck are you doing? Taking stupid notes like that?" And sorry for the language. I'm not meant to swear, but this is a crazy situation. But I've been super good at cutting losses, and I've always been cutting them at like $400 losses, $500 losses for the last 5 months. But this crazy FOMO came out of nowhere, and it flipped me upside down. And all of a sudden, I'm looking at a loss of $1,000, and I'll go through the trade. And I'm like, I don't want to lose $1,000. I'm like, I don't want to lose $2,000. I don't want to lose $3,000. But I'm careful about it now because I've thought about it. I'm $3,000 off green. It's literally 10 $300 days. For me, fortunately, I'm in a position where I consistently can make $300 a day. So it's a couple of weeks, 3 weeks, 4 weeks, 5 weeks, and I should be back on track. So I'm saying it with some jest, but it wasn't jest at the time. But I'll talk you through it. Basically, ADOM, the warning sign, and maybe we can put a graph of the chart on the screen. Unfortunately for the podcast partners, I'll try and explain it with as much clarity as possible. But
if you are listening and maybe you're at your computer, you could bring up ADOM on May 21st is the chart we'll be talking about. So
yeah, and I'm not 100% sure of the float. I think it was 40 million. But the chart is a really bad downtrending stock, and I've took 2 losses of 4,700 in my career so far, and both have been when the stock had multi-lifetime, multi-year, all-time volume highs. Whenever the stock trades more volume than it ever has in its history before, it doesn't really matter if the chart's downtrending or not. When it gets that crazy ass huge volume, just mental stuff can happen, and it can really just go anywhere at any time. And I remember looking at the first green day when I traded around 10 million volume, thinking that's a bit scary. But I tracked this pattern, and I've only seen 1 in 10 run. 1 in 10 that gap up 10, 20% that have run 50%. About 1 in 10 of them run. So I'll just put this volume to one side. And if you remember the Ducks conference, he says if you have conflicting indicators, bullish and bearish, don't take the trade. Maybe that's something I could have taken into account. But that was only my first mistake. I don't regret taking the trade because
well, yeah, and again, that's something I want to focus on is it's not, well, again, I might argue with you a little bit about entering in pre-market, but I mean, the tail of the tape is there. It was a good trade in hindsight. It's just piling in and not recognizing the volume is kind of what I wanted to focus on.
Yeah, I mean, for me, when you look at ADOM, if you look at a pre-market, you have this kind of, it's making lower highs. The volume's not very heavy. You think everybody's kind of lost interest. And for me, it's lower high, lower high, lower high. It looks like it's going to basically crack its previous day support in the pre-market from when I was looking at it yesterday. But what actually happens is it ramps up last minute and it just spikes like crazy out of nowhere. So pre-market, for me, pre-market, it looked like it was going to kind of fall through support in the 120s and collapse. So I was shorting it.
What was your entry price?
My entry, I was shorting in the 145s very early at about 7:40 in the morning, and I was taking profits in the 150s. I was taking profits in the 140s. I was up a few $100 on it, and then I thought it was going to crack in the 130s and just fail all day. So I took a very small position of like 300 shares, and then I averaged up 300, and then I averaged up 300 because it was keep on spiking, and then all of a sudden.
So you're making there's something we got to talk about there, and I haven't talked to Steven about this trade yet. I just knew he took the loss, but so you're breaking maybe the cardinal rule with shorting high volume stocks in that you're adding to a loser at this point, correct?
Yeah, I mean, I don't have a major problem with adding to a loser unless you've planned to add to the loser. If you plan to add to the loser and you say, I'll short a third here, a third here, and a third here, then that's okay. But what I did was I shorted at support, which I knew at the time. I was thinking, don't short support but I was thinking it's going to fall through. And that was me planning. Sometimes shorting support, it falls through, you can scalp. But my plan didn't work. And instead of cutting it, I just thought, well, I'll just add higher and add higher and add higher, and it's probably going to come down because all of these stocks come down. At most, they spike 8, 9, 10% on the open, and they come down. But the problem is a lot of people will be going long at support, and they'll be taking it off at 10%. So I was pretty much giving all the longs buying at support their profit window. I was paying them out,
right,
effectively. And then basically, yeah. And then from there, it spiked and spiked and spiked. And again, it had a kind of a bit of it spiked and failed and had a washout in the morning. It spiked and then washed a little bit in the morning. And if a stock ever spikes and fails and then starts retracing and going higher, all the shorts are underwater. Everybody's stuck. And that's the same whenever I'm shorting stocks that gap up. I love it. I love nothing more than seeing a stock spike and fail. But if that stock spikes, fails, and consolidates, or if it goes red and then red green, every single person who shorted that is underwater.
Yeah, and
then it's the squeeze.
What I see, yesterday morning is especially that, that reclaim of the pre-market high, and again on crazy volume, because what that tells you is when you get the kind of volume that ADOM had, yesterday traded almost 50 million shares yesterday. The first 5-minute candle was like a 3 million shares in that first 5-minute candle. So when you get that reclaim of the morning highs, that's all new buyers. This is everybody's seeing it on their high a day scan. Everybody's seeing it on their breakout scan, on their gapper scan, on their volume scan. So you've got that whole dollar, half dollar, which people love. People love those key levels. There's a reason when you buy a bag of chips, it's 99 cents. Or when you buy a car, it's $19,999. Or a watch and it's $299. People key on those levels, and it's the same way with those whole dollar, half dollar levels. So when you see that $1.50 level, It's also the reclaim of the morning highs, and there's all this volume coming in. That's not just, shorts covering from this morning. It's not people adding from this morning. There's too much volume there. That's telling you it's all new buyers. And I always use the analogy that always comes to mind on something like ADOM when it hits the high a day. If you could Google the World War Z Jerusalem wall scene, and if you've seen that movie, you'll remember it's just like 10,000 zombies swarming to the wall, and they're basically climbing over each other's backs to then get up and over the wall. And when I see ADOM breaking the high day on that kind of volume, that's what always comes to mind. And especially in this market we're in, especially early in the day, I want to be buying those, not shorting those.
Yeah, and volume's such an important indicator. It's probably, price action and volume are the most important indicators above any other, and it's above catalyst. It's above.
If you're looking at Fibonacci's and RSI and Bollinger Bands and all this stuff, and you're not paying attention to volume, you need to delete all of that crap off your screen, because until you're focused. You can multitask. You can look at all these indicators, but if you're looking at all these indicators and ignoring volume, back off. Get that stuff off your screen and focus on volume.
Yeah, and so many new traders, and I made the same mistake as well, and I know this is a segue, but so many new traders think I'm not making money, I need to add all of these indicators, but what they then become is a jack of all indicators, but a master of none. And what you really need to do is master one indicator in depth, and the best indicator to master first is probably volume, price action and volume. And the great thing that I've learned recently is if a stock tops out and on the day it traded 50 million shares, that is almost unbreakable volume, because it's going to need to trade 50 million shares again to probably try and break that level. But the problem is, I've only thought about this in the reverse way since I've took this class, so it was a very good lesson. If a stock hasn't traded much volume in its past and it trades insane levels of volume, it works the opposite way, and it's going to it has the potential to break to huge highs.
Now, at what point, where did you take this loss? What price, where did you ultimately stop out on this?
Yeah, so basically, I was shorting again from the 134. It was very small, and my plan was I was going to short about a 5-6% spike, which is part of my plan, 151, 152, and I was going pretty much full size in the 160s. Because I was shorting against the pre-market high. And then when it blew through the 160s, that's the perfect time that I should have cut it. But I made the fatal mistake of saying, you know what it is? I'll just wait for a dip. And I'll be interested to get your advice on this. I thought I'll wait for a dip, and the dip never came. It just ripped to basically the twos. And it was a little bit choppy. It was a little bit in and out, but I never got a real clean pullback. And then when I did get the pullback, I was making that other mistake of thinking, oh, well, maybe this is the end. I'll just wait. Do you know what I mean?
Yep. Now, where did you ultimately cover at, roughly?
Ultimately, I covered when it dipped, and then it kept on pushing. I was out in about the 175s, 176s.
Okay.
And it ran to the twos. Right. So to be honest, I could have lost about 10 or 15 grand. Do you know what I mean? I lost 5 grand. I lost 4,700. I could have easily lost 10, 12, 13 grand. If I'd have held through it all, I probably would have made 5 grand.
Sure. But, yeah. So back to your question, I say, so I'm going to answer your question in relation to what you did. You're saying, okay, should I wait for dips to cover? Should I just get out? In my opinion, in your situation, going back to yesterday, you've already told me that you broke your plan. You weren't gonna keep adding. That wasn't your initial plan. You started adding to justify. I say once you've broken that plan, once you've added to a loser when you said you weren't going to add to a loser, I don't care what the price is, get out, because it never gets better. Well, maybe not never, but 99 out of 100 times it only gets worse. It's almost bizarre the way it works. Yeah. But when you hit that front side short and you're adding when you said you wouldn't add, probably 999 out of 1,000 times, it always gets worse. It can always get worse than you thought it could.
But it always just comes back to you shouldn't be shorting, or you shouldn't be taking trades that you're not familiar with. If you're not familiar with the pattern, you shouldn't take it, because if it's one of my bread and butter setups, like the stocks that gap up and crap, the minute I see a wash and a higher low, I'm the first one out. I'll beat every other short out of that short. I'll beat them all. I'll be the first one out at the higher low. And if I cover early and take early profits and left tons on the table, doesn't matter, because I know more times than not, when it makes a higher low on a low float with high volume, it's going to run. So, but with this pattern, I'm not that familiar with it, so I'm just hoping it'll probably come down. The data roughly that
there's the other lesson from this episode. Notice how he brought in the hope word. We try not to swear on the Steady Trade podcast. A swear word will slip out every now and then, but the ultimate swear word on the Steady Trade podcast is hope. That is the worst 4-letter word ever in trading. If you utter that word, it is much worse than any other 4-letter word.
But yeah, I mean, the whole thing comes down to, and I mean, I can say it with a bit of jest now because I feel okay about it. It's nowhere near as bad as the last time when I took it. You really had to pick me up after that. When I last took the $4,700, that was like, I'm quitting trading. I'm done. It's over. I'm walking away and I'm not coming back.
Yeah, I remember
that was tough.
A lot of, I coach a lot. I've coached a lot of youth sports through the years. And yeah, I really had to coach you up at that point. It was like you'd struck out 4 times in that game, and we had a double header, and I was like, man, I got to lift him up or he's going 0 for 4 in the second game.
No, it's much better when you know that you can make the money back. If you stick to your bread and butter, it comes a lot easier, and the losses aren't as bad. And I've had a lot of supportive people being like, "Don't worry, you'll be back in a 3, 4, 5, 6 weeks," and I think I will. But the whole thing comes from it's fear of missing out causes you to break a plan, and if you break a plan, you're just done for. Like, I broke my plan. I got in an uncomfortable situation and I didn't want to cut the loss. If your plan is to cut the loss and then oh, well, it's broke my plan, I need to cut the loss. But I went in kind of without a plan. See, and it's mental. I must be an idiot, but how after 2 years can I not go in with a plan?
And I think that's we talk about it, seems like every episode, but that's why we bring it up so much. I mean, I can't sit here and say I don't make the same mistakes. Trading, it's about mistakes. It's a lot like baseball. I use this analogy a lot. The best baseball players, the best of the best still get out 60% of the time. I mean, if you're batting 400, you're all-star, you're probably in the Hall of Fame. So it's a game of mistakes, but the biggest thing to take away is to recognize when you've got that hope, when you recognize the FOMO, when you're looking at this stock, which, it was, the simple fact is, ADOM was up. Bear with me. Yesterday morning, it was up 100% at the point that Steven shorted it. So, you need to recognize that just because it's up, especially in this market, just because it's up 100%, we had SNES the last couple of days that went 300-400%. So you need to wait. And I tell you, especially if you're a new short seller or an aspiring short seller, the risk to reward is so much better late day. Now, Steven deals with the fact that, he's in Dubai, he's 8 hours ahead, and it's like 2 a.m. if he's shorting it at 2 p.m. for a lot of us. But really try and battle that FOMO, especially in pre-market, man, because so many, you see it a lot. There's so many of these runners, they spike pre-market, they pull, and then they reclaim that high right after the open. And patience is the key, I think.
Yeah, I mean, what threw me off, I think, with ADOM as well was the volume felt a little bit light. It didn't feel too heavy.
Well, it didn't turn on until the open. I mean, that's the one thing I will defend you. In pre-market, it was just kind of doing whatever. It wasn't like it was ridiculous volume in pre-market, but as soon as the bell rang, it was off to the races. That's for sure.
Exactly, and that's when I kind of thought that is this stock manipulated or what? But even if it is manipulated, it doesn't matter. Like you've got to play the game. We're in the game.
Yeah.
But the one thing I will say, and I put this out on a tweet the other day, and it's done quite well because it probably resonates, and it's when you're running quite well and you're making money that you've never made before and you're experiencing profits that you've never experienced before, be absolutely explicitly front of mind aware that a big loss could be right around the corner. Because it's when you start losing touch with reality, when you're winning constantly and you're on a hot streak. And I mean, a hot streak can be different for different people. But for me, after losing for a year of trading, to be up 6-7K in 5 months, like I was like up in the air, up in the clouds, thinking, I can't believe this is happening. I've finally made it as a trader. And then boom, the minute you start thinking like that, your feet leave the ground, you very quickly get humbled by the market. And before you know it, you're not that far away from where you started, profit and loss wise.
And I think that's the goal quote of the episode for sure is recognize when you're on that hot streak, and there's no point, and you know, it's about repetition, it's about learning, but there's no point in giving back 5 months of gains simply because you got a little cocky, you know, you think everything's working. And then you start going into trades without plans. You start hoping. You start repeating all these mistakes that we talk about every week. And now, yeah, you know, I'm confident we can get you back to where you were and back on the profit train. But to give back several months of gains, that's a tough place to be, just because of being bullheaded and being, you know, bit by the FOMO monster.
Yeah, and I mean, and it's tough because I mean, I chatted to Tim about it, Tim Sykes, and he was just saying, look, you've got to take full accountability and responsibility for this, and it's your problem and it's your fault, and you need to lift up. And in the back of my head, I was like, yeah, but I mean, I know Huddy lost for a year, and then he was making money and giving back money for a year, and now look at where he is now, and the other guys have took big losses as well. But he was like, nah, don't think about other people. This is on you. This is your mistake. Don't console it with
I think that's
other
a good
people's
point. Yep.
And I was just like, yeah. I mean, I literally need to print out. I just need to remember cutting. This is the other thing. Cutting losses is the number one rule, and I can't understand why I let it slip. Why would you think that the number one rule in all of trading is not relevant anymore? Why would you think that? But we all do, though. I mean, you've took losses. I've took losses. Everyone's took losses. Everyone seems to forget that cutting losses quickly is somehow not important when you're making money, and I don't know why that is.
Well, and especially, you know, the short game. I love the short game. I love shorting stocks. You know, not necessarily the best market for it, I think, but you know, there's great opportunity there. But I've always said one of the things I love about shorting is you have to be, you know, an assassin when it comes to taking losses, because they can, you know, like I said, it almost always gets worse. So the beauty, if you can have that discipline and you can stick to your plan, I mean, a lot of these stocks, it's real clear when it's time to get out. When that thing reclaims the high of day on big volume, and again, I'm not beating you up on this, but that's
totally agree.
That's a clear signal that this thing ain't ready yet.
But I'll tell you what. I mean, I was trading with a couple of my pals, because I've got a couple of pals who I trade with, and a couple.
Was Touche there? Touche was probably the one telling you to add.
Touche doesn't take trades. He's like, I study 17 hours a day, but I've only took one trade all year because I haven't seen me set up. I'm like, Touche, you can't make money by not trading for 3 months. Like, there's discipline and there's discipline. But Touche will hate that I'm hating on him because I haven't spoken to him for a while. But I recommend, if you want to know Touche, search Touche Garcia's YouTube channel. Touche Garcia, he has an excellent rendition of a poem about his mom, and I fully recommend it. But on another subject, I've lost track. Yeah, I mean, this is
I distracted you with Touche.
Yeah, I was just thinking about the poem he does with his mom. I will have to play it at the end of the episode. It is an absolute awe-inspiring Golden Globe performance. But I was trading the same setup with a couple of guys, and they all cut it at high of day. I was the only one who didn't cut it. And I'm one of the more and I'm one of the more experienced guys. I'm one of the guys at that time I was the only profitable one in the trade overall. And I didn't cut it because I was cocky, and I just thought, you know what it is? I'll ride this one out. Count size is all right. I've been doing well. I'm sure this one's going to come down. Famous last words.
So well, I think we broke it down. So let's give a takeaway. What are you know? And hey, I'll be there again. You know, I'll break my plan. You know, I'll do it. I could do it this afternoon. Who knows? We'll all be there. Nobody's perfect. I talk about this a lot in Stocks to Trade Pro. If you're following somebody, whether it be on Twitter or in a chat room or whatever, if they say they're perfect or they are always right, I always use there's that gif of Homer Simpson backing into the bushes. That's what I always think of when people say they're perfect. So we're all going to make these mistakes, but you've had your hand burn on the stove here. I mean, what is your key takeaway? What are you going to fix in the future so that we don't have to have a third Steven Lost 5K podcast?
This is the time.
I mean, it's like movies. It's kind of like movies. Usually the first sequel isn't bad, but by the time they get to the third sequel, it's like nobody wants to watch this crap anymore. So
we have to like block this into its own like series, right? Like Steven Lost 5K part 1, part 2, and part 3, and they're all like several months apart. No, but the main takeaway for me is I was very, very, very focused on one or two setups, and I didn't track enough data on this setup. And sometimes I compromise the setups a little bit because I really want to continuously make money. So for me, it's a case of stepping back a little bit and only taking the setup when it's perfect. There's no need to try and make something a setup that's not a setup. So for me, I'll short, but I need to make sure that I'm risking 2, 3, 4% max, and I need to have it factored in a plan that I'm risking 3-4% max. And sometimes that means you can't trade pre-market because you need to see it spike at the open so you can make sure that your risk reward's correct. And so that's the thing for me, not going in shorts where I know that I could be risking 7, 8, 9, 10%. I need to be risking 2, 3, 4% max. And that's okay. I mean, take a half at one position, take a half higher up as long as it's planned. The other thing that I've started to do recently, which really has helped me because I'm really trying to be risk averse at the moment, is I'm looking for the higher priced stocks that I've been doing well on, and I did very well on WWE.
I like how you say you're trying to be risk averse as you added to a short trading 60 million shares about 23 hours ago.
It's the new me. It's the new Jeevan. It's the new Jeevan, the new risk averse Jeevan. But the other thing is a new pattern that I'll share with you guys that's really, really, really working. WWE was an excellent short today. PSG, was it PSGC or PGSC or something like that? Can't remember.
Wasn't P-Lab, was it?
I'll tell you right now. I took a few hundred.
PLAB was a failed earnings winner, but
there was a stock. I mean, I can't find the ticker, sadly. Oh wait, trades. PSTG was a very, very, very good short today, and it's because it kind of, if you see any stock that has a weak close, week after hours, it's overextended in its closed week. My favorite kind of short, and you can always get borrows with higher price stocks, is if you let them spike right into resistance and you wait for them just to fail at resistance. You can literally short risking 0.5%, 1% when they look like they're about to fail the resistance, and you can pick up 3, 4, 5, 6%.
That's my thing is especially, everybody loves these $1 stocks because they'll drop 50% out of nowhere. But I think, especially where we're at right now, I mean, there's huge opportunity in these $10, $15, $20, $30 stocks. Back to that rule of 10 we talk about. I mean, look up PSTG. I did not see this morning. I mean, I don't see everything, but that's a sexy chart right there. I mean, it spiked. Exactly to yesterday's highs and then failed. Yeah. So
yeah. So my problem.
And the nice thing is, I'm assuming since it's a $20 stock, probably pretty much every broker had borrows. You don't have to worry. Easy. One of the things Steven deals with, I chastise him about shorting in pre-market, but one of the problems with his strategy is a lot of these low price stocks have limited availability. So he feels, and here comes Mr. FOMO again. He feels like he has to short in pre-market because if he doesn't, all of the borrows will be gone.
But the thing is, and this is a little thing that StocksToTrade. I mean, what I do is basically
do some research, do some due diligence. I'll spend an hour, maybe I'll spend 30 to 60 minutes. I'll go through all of these higher price stocks. I'll look for the ones with weak closes that are up a lot. I'll just set an alert. I'll just set an alert saying if this gets to this price, I'm going to short it. Or I'm going to keep it on an eye. I'm going to watch it to fill. If it breaks through the level, it's a breakout. If it starts topping out at the level, I'm risking 1%. And you're doing nothing at the open. You're just standing there and you got, and then 20 minutes later, you got, and it's the StocksToTrade is doing it for you with the alert system. And you're just logging in, watching it fail, shorting. But the things with that is it's preparation. It's a tight risk reward. So you're really not risking a lot. And then once you get a bit more comfortable, I'll size up a bit more on it.
Actually, we'll wrap this episode up, but we will do an episode on that alert strategy. I think back to when I was a part-time trader, I lived and died by alerts. Real quick, I'll kind of tease this coming episode, but my process back when I was a part-time trader, I had a business, I had a family, everything, I'd get up early, do exactly what you just said, and I would set so many freaking alerts every day. I still get them today. I used to use Thinkorswim back in the day, and some of these alerts are like 8 years old. I'll get some alert. I'm like, what stock is this? But I would set some days maybe 2 alerts, some days maybe 10. And then what I would do, and this is what I've talked in past presentations and videos when I was a part-time trader, I only traded if that alert went off. And I wasn't chasing shiny objects. I wasn't feeling FOMO because I set all my levels and I walked. And then if that phone didn't buzz or that computer didn't beep, I didn't trade that day. So that's a great discussion. I didn't realize you were doing that. So
you're literally playing support and resistance as well. You're playing support and resistance. Yep. It's crazy how many traders do it and how easily it works and how you can do it with size and make money and there's no risk. But that's the point. I'm trying to be more risk averse, and I'll ask you what your advice is to stop FOMO as well, just to close it out. But I'm just taking less risk, shorting if the stock gets to the price. And the strategy that I've got, which is really working, is I'm shorting with 1% risk on stocks that are overextended or they've shown signs of weakness. But what would you say your advice was for FOMO chaser?
So I'm assuming the majority of our listeners are, we talk about this a lot, are either new or intermediate traders. So I say if you're a new or, maybe new to low price stocks, is you only trade stocks that are on your research from the previous day. Avoid today's crazy runners. I mean, that will save you from getting run over so many times. ADOM, perfect example. I don't know how hard it was to borrow today. I didn't check. But if you ignored it yesterday and then looked to short it today, like we mentioned when we went live, it's down 20%. Do your previous day's research. Look at the previous day's runners and force yourself. ADOM didn't spike till almost 9 o'clock. Just get that stuff off your screen. And I'm talking long or short because so many of these stocks are incredible shorts. Day 2, day 3, day 4, but they run 3 out of 4 times. They run everybody over day 1. Day 1, ignore. That's the biggest takeaway.
Yeah, and just a final thing to call it out. This is the second loss I've experienced. I just want to say to people, if they experience losses or they're worried about experiencing losses, it probably will happen. It's inevitable that it does happen, but it gets easier. It gets easier with time, and once you start being able to make money in the stock market, and you know that you probably can't get it back, it's a lot better. The hardest times and the most difficult times for any trader is when you're losing your own money and you're not sure if you're ever going to get profitable. That's the toughest time, and if you can get through that, it just gets easier and easier.
Hi, this is Erica Meyer from Toronto, Canada, and when I'm sitting at the cottage, I like to listen to Stephen and Tim on Steady Trade Podcast. You can register to win real, actual prizes at their website, steadytrade.com. And if you really like what you hear, give the podcast a 5-star rating and write us a glowing review on iTunes. I did, and this is how we say goodbye in Toronto.